Welcome to the Fuller Tracy Money Audio Commentary. This is Owen Tracy recording. It's 3:06 p.m. That is Central Time. Today is December 10th. Well, we just had the Federal Reserve's interest rate decision. They've cut by an extra 25 basis points. This was also a day for other central banks. So the Bank of Canada held rates, and that's still at a rate that's below where the Fed is at. But then I think the big question heading into this meeting was how hawkish was the Fed going to be? And it was viewed more as at least a neutral, potentially even a dovish cut, even though it was a split decision. So what we had in the bond market was, I think it's a very different environment to what we had going into the October meeting. Going into the October meeting, yields went down. And there was the anticipation that there were going to be more interest rate cuts. It turned out to be more hawkish, and immediately after the decision, then the yield started going up. Well, there was a wide expectation that this was going to be a hawkish meeting, so it was largely priced in. And we had a big rally in yields going up to 4.2% over the last 10 sessions. And because it was not quite as hawkish, then we've had a little bit of softness in the yield and some resistance in the 4.2% level. Now that removed some of the angst in the stock market. So the Nasdaq was in positive territory, gold was in positive territory. Silver, which has been surging over the last several days, was a bit mixed in here today, but certainly not falling. Then when we look at what else is happening around the world, well, oil prices, having been lower for most of the day, then started rallying in the middle of the day, or coming into the close, because the US Navy has interdicted a sanctioned tanker off the coast of Venezuela. And at the same time, you have Ukraine continuing its attacks on Russia's shadow fleet. So that's raising the risk profile in the energy markets. Then I am looking today at several of the winners, or well, actually looking more at the losers from the GLP-1 revolution. And it's really raising an important question whether we have a true value scenario with some of these alcohol and processed food companies, or is this a value trap? What seems to be quite clear is that if access to GLP-1s is democratized with the price coming down, and some of these companies adopt more of a pile 'em high, sell 'em cheap type of business model, then there will be continued pressure on the revenue base for some of these companies. And that is certainly a significant threat to where the valuations are even today. So certainly plenty to think about.